So we can either take out all, we could take all that out, and then, so if it does take this out, then this level, this bottom level, is more realistic. So yeah, but the thing is, I can talk about all these lick levels, you know, and it makes sense to a degree, but there's so much going on in the world right now which is just utterly confusing. So we're having a systematic decline of the dollar, and we have done, you know, for about a year now, not a year, October, sorry. So it's just plummeted now, and it's quite fishy how things have happened. So we're having the fastest rate hike in history in the US and in the UK, and the dollar is still falling. Now historically, if you raise interest rates, you're basically strengthening the dollar, but that's not happening here. You know, rates are getting absolutely shot into space, yet the dollar is dying. And we know during this period over here that they are not printing. In fact, M2 has been falling, and rates have been rising. So what the hell is going on over here? Why are we seeing all of this falling? So there has to be a much bigger fundamental reason why we're having the dollar fall away like this. Like we had another rate hike recently. What happened? Basically not much. We still got falling. So what is that systematic error that is causing the dollar to fall? Well, I addressed this in the cuddle, partly addressed it, and the reason being is that people are now fleeing from the dollar. They've seen what the West has done to Russia with the sanctions and stuff like that, and people don't like that. They are getting fed up of being bullied with the dollar. So what are the BRICS doing? Brazil, Russia, India, China, South Africa. Five of the largest. I'm not saying the largest, the most powerful, but they are, the BRICS as a whole is a massive, is a massive force to be dealt with. Brazil, Russia, India, China, South Africa, they're huge economies. Well, what are they doing? They are dumping the dollar. I think as recently, if we just look at Brazil, China by, let's just do deal. Here we go. Look at this. So this was as of about a week ago. China and Brazil set up infrastructure for yuan, so yuan renminbi clearing. So what this means is they are pushing ahead, and this is very recently, March 29th. Brazilian authorities will connect China's, So instead of the dollar payment network, China has the SIP, so the China's cross-border interbank payment system. And so all of a sudden, China and Brazil don't have to swap their currencies into the dollar to trade. I mean, how big is that? That is freaking huge. So just to really drum home on this, over here we have Brazil, over here we have China. Historically, when they've had to deal with each other, they've both had to convert into the dollar, and transact with each other. Well, obviously that's completely inefficient, and we all know, we can all see that. But what they've done now is gone, I think it's time we just got rid of the dollar now. Let's just do a yuan. Oops, yuan. That's huge. And it's not just that, it's the BRIC nations completely. And not just that, I think also India are trying to, they are part of the BRICS, sorry, what am I talking about? So, and it's happening very fast. So I think this is the reason the dollar is dying, because freaking countries are starting to, they're not ditching the dollar. So you'll probably see articles go, oh yeah, this country's ditching the dollar. They're not ditching the dollar, they're just opening up a lifeboat, if that makes sense. So instead of being 100% reliant on the Federal Reserve and their whims and fancies, they are having another, another escape boat. It's like having multiple bank accounts. I'm using Santander Business, but because I'm setting up other bank accounts, it's not because I'm moving completely away from Santander. I just want backups and also options. And
actually, sentiment and herd mentality is playing a part in this from countries.
I don't know.
Yeah,
It's different with retail and countries act differently. I think this is more of smart people in the BRICS nations going, holy shit, this is the beginning of the end of the US empire, and this is the beginning of the beginning for the Chinese empire. We may as well start relationships now. And they can see, the whole world can see China basically muscling in on the geopolitical scene. They're brokering peace deals between the Sunnis and the Shiites. They're doing all of these bilateral trade agreements with all these different countries. They already own Australia and and Africa pretty much with their checkbook policy. Like, I think if I was a country, I'd be making bilateral trade agreements with the Chinese as well. Why not? Especially
that's what I mean. Sentiment is still human behaviour.
Yeah, true.
So, the macro stuff just I find really interesting. So with this, you're just going, this stuff's happening really quickly. So if you were smart, sat on a decision-making panel of the country, you might go, shit, this is happening a lot quicker than we need to do something.
Yeah.
Momentum.
At the most benign, it's a country going, oh, actually, China's just come along and offered me better terms. Therefore, I'll be able to save X billion a year in, from swapping, from my currency to the dollar or whatever. I can save X amount of money. That's the most benign excuse. The most extreme reason is that they don't like the West. They don't like what the US is doing. They are frowning against, the World Economic Forum. They can see that ESG is basically a secret way of, one world government and all that sort of stuff, and they don't want to be beholden to the Fed coin, which, by the way, Fed Now, which is the US, so the US federal Fed coin, so the US CBDC, a major part of it is called Fed Now, and that launches, I think, in July, early July. Fed Now service. Let's have a look here. Launching July 2023, instant payments with the Fed Now. So this is literally the CBDC starting to, it effectively goes live in July. Holy shit. Instant payments, all that sort of stuff. I need to look into it a little bit more. It's one of my things that I'm reading up on at the moment. And so I think at the moment it's just, I think it is a wise thing to do if you're a country. Just not being beholden to SWIFT and the dollar payment network. Opening up other bits and bobs. So what does this mean? From the bigger perspective, let's go to the weekly chart. If this trend continues, in fact, let's go to the Dixie. So there's less drawings on the Dixie. Here we go. So if this trend continues and we're having all of these countries move away, which is happening, by the way, it's not an if, it's when, and it is happening as we speak. The only thing that it could happen is the dollar to keep on falling. So if the dollar keeps on falling, all of a sudden, what are they going to do? The only thing they can do is print their way out of oblivion, because they're losing out on, global commerce. They're losing out on all sorts of stuff by people not using the dollar, and therefore the dollar becomes less valuable. And what happens is, by the way, I'm not saying this is going to happen, if the dollar just keeps on falling, and we've had back in sort of the tech bubble and stuff, the dollar fell pretty heavily. I mean, it's always had times where it's fallen heavily, normally around, economic crises and stuff like that. But, there's nothing saying that the dollar can't go back to, these lows. I mean, the 80 level in the Dixie, we've been there many times before. And if you were of a charting nature, you'd probably say, hey, that looks like a base support level to me. Just like the 90 level looks like a pretty big base support level to me. You could also say, if you were a trading charter, you could probably say, oh, actually, this 90 level looks like a bit of a perch to me, where, it's just, it could fall into there, hover around a bit, and then just collapse. I'm not saying that is the case, but some could say that. Now, let's go.
Just one question on that.
Yeah.
So you're looking at TA here. From a fundamental analysis, the difference is the fall of the US, basically.
It's the beginning of the end of the dollar hegemony.
Or how do you describe it?
Yeah.
Is that the difference?
Yeah, I think so. I think we're entering a period where no one alive has ever seen before. No one alive. I think the last time we're in this sort of transition, I believe was, the end of the British Empire, the beginning of the US Empire.
Yeah, that's what I was comparing it to.
Yeah.
Okay.
And if you look in the early 1900s, before World War One, the US, all of a sudden countries started cozying up to the US. All of a sudden the pound sterling meant less, and people were getting dollars. The US was the new virgin landscape where dreams could be fulfilled and stuff like that. And the economy was booming in the early 1900s for the US. Now, what does this mean? If the dollar continues to plummet, the only thing that can happen for M2 is M2 will go up. So they will print, because a plummeting of the dollar. Now, so here's the thing. This is why I think personally a disconnection in some correlations will happen. So let's get Microsoft Paint. It's probably a bit easier. So one of the easy sort of things that all of Wall Street and the world has relied on for, let's say, 20 years is that if the dollar goes down, stocks, let's just put assets go up. Okay, so that's one relationship. Everyone has basically relied on that for ages. Another relationship is if they print, QE of some sort of print goes up, assets go up. Now, really, that's not a different relationship. It's part and parcel of the same thing. So, dollar going down / dollar printing is part and parcel of the same thing. So, one of the things everyone has been relying upon is that, dollar go down / printing, assets will go up. And I think that is the case, but I think what's going to happen now is that relationship, or some of those relationships, could start breaking down. And what I mean by that is, let's say the dollar starts to break down because people are just using it less. Countries, not just people, I mean countries are using it less. The petrodollar system is failing. Saudi, the Middle East are also running away. Well, at the same time, I think in order to I cannot see a way that as that happens, they don't do some sort of QE, stimulus, helicopter, or even helicopter money, eventually with, CBDCs and stuff like that. So what this means is that assets, yes, will start to boom, right? But I think all of a sudden, this is the beginning of the US entering the same situation as Venezuela and Argentina. And you've all heard me talk about the story of Pablo and Paula before with Argentina. It happens very slowly, and then and so I think at some point we'll see this start to break down, where I think assets will start to boom initially, and then eventually assets could do this when the whole world finally wakes up that something systematic has broken in the system. Now, when I say this could happen, I'm saying this could happen over the next 1 to 5 years. So what I'm not saying is that, expect stocks to fall. I think in the very short term, I think it's probably safe that we can rely on that relationship. Dollar going down, QE of some sort, assets boom. So what this means is that stuff which is directly correlated to the dollar will do well. So gold and silver should boom because it is directly weighted against the US dollar. Bitcoin will do well. And again, certain stocks will also do well. So and if you look at what happened in Venezuela and Brazil, Argentina and Lebanon and Turkey, the same thing always happens. but it's a lot slower. Ooh, other way around. Dollar R's. Last time I checked, it was 101, I think, for the Argentinian peso. Are you shitting me? Are you literally shitting me right now? Holy crap. No. Argentina's fucked. Wait, I've got to find this presentation. No way is that high already.